In this video, we are looking at the Baton Rouge, Louisiana rental market for multifamily properties. So we can look on the map here and kind of see where Baton Rouge is located. We have New Orleans right here. If I scroll out a little bit, you'll see here is the state of Louisiana. We have Lafayette over here, Jackson, Mississippi over here, Beaumont, Texas over here. If we keep going down I-10 a little bit further, we would run into Houston. Okay, so kind of in the middle of southern Louisiana. This is the metro statistical area. And just like always, we are excluding all corporate, all military, all senior, and all vacation. And we are only looking at market and market affordable, so basically conventional apartments. Okay, if we look at location, we can see that we are in the Baton Rouge, Louisiana metro statistical area. So let's go look at the analytics. So here is our supply snapshot. We can see that we have 662 properties that are in this market for a total of 39,989 units. That is all Class A, Class B, and Class C conventional apartments. There are still 1,124 units under construction, and over the last 12 months, 537 more people have left the market, the rental market, than have entered the rental market. And the vacancy shows because the prior year it was 7.7 and now it's up to 10.2%. Okay? And we have some increase in the rent year over year, but let's see what it looks like quarter over quarter. So let's go look at the data. So here is all classes, A, B, and C, rent analytic data. We are not looking at the asking rents. We don't care what the owners and the property managers are asking for. We want to know how much they are collecting. So we are looking at effective rent. We can see that in first quarter 2022, it was 1088. It went up to 1117 in the second quarter, and then the reduction started occurring. So down in third quarter, down again in fourth quarter. As a matter of fact, fourth quarter has lower rents than does the first quarter. So we are trending downward for sure. Let's see if we can see why. So if we come on over, we can see for deliveries that we had no units deliver in first quarter and 8 absorbed. So 8 more people moved in the rental market than moved out. We had 153 units deliver in the second quarter with no absorption. 205 units delivered in the third quarter, and 305 more people left the market than entered the rental market, nullifying the 205. So we have a total of 358, 400. We have a total of 400 units delivered, and we ended up with 621, because if we add these two together and subtract out that 8, 621 people left the market. So more people, 621 more people left the rental market than entered the market, and 400 units went online. So over 1,000 units went vacant during the during the 2022 calendar season in Baton Rouge. Okay, and we can see that because occupancy was at 92.2% fourth quarter 2021. It is down to 89.9. So one thing we did not look at, let's go back to our summary and let's look at the long-term occupancy average. So we now can see that over the last 22 years, the long-term occupancy average is 90.9%, and the current rental market is at 89.82. So that puts the overall Baton Rouge MSA for conventional apartments below the long-term occupancy average line, putting them in phase 4 of the market cycle. But let's look at each individual asset class and see where it falls in line. So here are the Class A properties. Again, we're going to look at effective rent. There are a total of 36 properties in the market, totaling 7,189 units. At the beginning of the year of 2022, we started at $1,429 a unit, went up to $1,465, and then the downtrend started. Now we are $27 less in the fourth quarter than we were at the start of the first quarter of 2022. So my guess is we're going to see a big negative absorption for the Class A's. So the Class A's only had 42 units deliver. Out of those 42 units, if we look, we've got 50 that absorb first and second quarter, but then negative 50 in third. So we nullify those out. Of the 42 units, 117 more people left the market than entered the rental market, meaning we ended up with a total of 159 total vacant units throughout the year of 2022 in Baton Rouge. So let's take a look at the Class B market. So here are the Class B rent data numbers. Again, we're looking at effective rent. We started at $11.70 at the beginning of the year, went up to $11.94, and for the first time with all the asset classes at this point, we see that there was an increase in third quarter, not a decrease, but we did end up with the decrease in the fourth quarter. So, and we are below where we started again in the first quarter. So far, overall, Class A and Class B are all below in the fourth quarter where we started in the first quarter from 2022. Let's look at our deliveries, our under construction, and our absorption. So we can see that the B class market is what the developers are building to, and the rents are high enough that you can afford to do so. So there were 358 deliveries in 2022, and it looks like there was just a mass exodus. Not necessarily mass, but you had 169 more people leave the rental market than entered the rental market. Take that 169, add it to the 358, and that's the total number of vacant units that went vacant during the 2022 year for Class B properties. And of course, this occupancy shows that started at 95% and is now down to 91.6% at the fourth quarter. Again, we're not looking at Q1 for 2023. There is not enough data yet. As a matter of fact, CoStar does not even have data for 6 weeks after it's collected. So these are probably some kind of forecast or projection. So we're only looking at 2022. Let's go look at the Class C's and see how they are performing. So here's our Class C data. Once again, effective rent. There are 465 properties in the market, so probably a little over half the total in the marketplace, with a total of 17,414 units. So if we look, we can see that the Class C rents at the beginning of 2022, first quarter, were $840, went up to $870, and then started declining from there. So this is the one asset class that has not gone below what it was in the first quarter, but it is trending downward. So let's go look at our absorption, because we won't have any deliveries or under construction. And once again, we're showing negative absorption all the way across. So what does this data tells us? And just like the rest of the markets that we've looked at, this is saying that either the people are moving out of the rental market and into single-family home sales, which probably isn't the case with the interest rates with the way they are, or they're leaving the market completely and going to work somewhere else, which probably also isn't the case. But what is more appropriate here is that we've hit the affordability apex. These residents can no longer afford these rents, and so now they are doubling and tripling up, and that is affecting the absorption in the market because people are moving to Baton Rouge. There's jobs coming there. There aren't people leaving, so the only logical explanation is that they are doubling and tripling up. So that concludes this video for the Baton Rouge metro statistical area. If I were to plot this on a market cycle chart, I would plot it either right on the long-term occupancy average line going from phase 3 to phase 4, which is hypersupply to recession, or maybe even 1 point deep into the recessionary phase. So Baton Rouge is definitely on its way down. Tomorrow, we are going to do the Denver metro statistical area, so I look forward to seeing you tomorrow.